everybody. Welcome to another edition of your Daily Five. My name is Chris Kimble, and today's August the 16th. I hope you have a great summer, and Labor Day will be here before we know it. I want to talk today about what I think is, with StockCharts, is one of the big strengths of this program, and I want to talk to you about how you can use one of the tools in StockCharts as far as a filter. And so today we're going to discuss kind of the term of a heat map. We're going to screen out some hot and cold opportunities, and we're going to combine it with moving averages. NATGAS has been white hot. People in Europe don't like that. Is it peaking, or is it just going to get started? We're going to discuss that. Is King Dollar at any extremes? We all know yields have been going up. Are there any opportunities there? I want to talk about some commodities and also the growth value story. So one of the things that I would encourage you to do, and this is very helpful to me, this is just nothing more than a heat map saying, hey, what's done well lately? And so this is a fun screener for me to start. It's a one step prior to StockCharts, just from a real simplicity thing, is I want to see, well, what's really hot? And so this top section is essentially the assets that are the most above their 200-day moving average. And so I'm not trying to get into some day trading thing. I'm trying to find really a nice swing that's coming up. And then the bottom row is what assets are farthest below the moving average. So you probably wouldn't be surprised to see King Dollar up here. NATGAS has been high. Yields are doing well, no surprise. Then what's at the bottom? You know, the metals have struggled, gold and silver. Euro is struggling. It's the opposite, polar opposite of the dollar and stuff. So I want to share with you how you take something like this and then use StockCharts stuff as a real strength. And so one of the things that's been hot is NATGAS. And so one of the things I love doing that you can do in StockCharts is apply, and let's see how hot something is above or below a moving average. So I wanted to look at a little further time frames. And so this is an 80-week moving average. Some would call it a 2-year moving average. But the bottom piece is how far above or below is an asset above their 80-week moving average. And so you can see NATGAS recently was almost 80 to 90% above the moving average. And you can see this 2-year moving average is going up steep, but it still can't catch up so far with NATI. So the thing I think is interesting is somewhere along the line this is going to cool off, right? And that's the whole point of using these type of great tools within StockCharts, is finding the assets that are really hot. And so NATGAS is just up against a falling channel that it's been in, everybody, for over almost 17 years, 2 decades. So it's very extended. It's up against that falling resistance. So one of the things I want to talk about is, in my opinion, this gorilla is looking over here because NATI is facing, in my opinion, about 800-pound triple resistance. So let's look at this kind of noisy chart. You see really steep. NATI's been in this for the last couple of years. You see it's at the top of the steep channel. But when you look back, this is NATI monthly, that the blue lines are really a long-term channel. And then once it broke below it, it has struggled. And so now it's knocking on the door of the underside. And then if we take the high in 2005, we take the low of a couple of years ago, NATI's facing at 61% retracement level right now. So this is why I want to say it's facing triple resistance. We see that it has been extremely hot, but I do want to make this case that if it breaks and can take out $9, everybody, the next key level of resistance isn't until 14. And do some math, that's like 40% above current prices. And if it would ever clear its prior double top back here, just call it $14, the next extension level is 21. So there could be a lot of room, even though this is a hot asset, right now. So speaking of hot assets, here's King Dollar. So we're going to apply the same great tool within StockCharts, the 80-day, moving average. And with that in mind, you can see that the dollar is extremely far above it. So there's going to probably be an opportunity that is King Dollar really stretched. And this is why probably the metals have done poorly. How about the CRB? 2 years ago, do any of you remember in the height of COVID, was there any talk about deflation? Was there any talk about, wow, unemployment's going to be sky high like back in the 1930s? We're going to a depression. And yet, look where the 80-week moving average on the CRB was. It was almost 35% below its moving average. Would that have been a good time to buy? Yes. How about back in here? Yes. Were these good times to sell when the CRB was hot? And so this was the hottest time period in the history, or going back at least in the late 70s, where the CRB was 40% above its 2-year moving average up here at 1. Pretty hot. Don't be surprised. What gets me is, when should the government have passed an inflation bill? How about at the height of COVID? But no, they just passed it recently. So has the government ever closed the barn door when the horses were out? Well, they have, and this may have been another move. How about yields? So yields now are or they did hit, almost 80% above their 2-year moving average, up against 30-year falling resistance. And where were we 2 years ago? Look how low yields were. And so that was a time to what? Sell bonds and buy yields. So do we have the opposite situation going on now? So here's TLT on a daily basis, and we know it's been hammered. So I'm kind of watching this pattern in place in yields at the exact opposite of the chart that we just looked at. This is price, excuse me, in bond prices. What about yields and stuff? So can you do the same thing with the growth value story? And you can. So here's VUG divided by VTV, and look, using this great tool of StockCharts, that was a time to go against tech, and now is this the time to go and bet for it? Look at these extremes. So one of the things that we try to do is we look at strength, what stocks have done well over any given month over the last decade. So I've got a filter criteria. Got to look back a decade, and it has to be up 10% or more on average, and is up 7 out of 10 years. And so what I wanted to share is we share this with customers before every month, and just want to give you an example. PAYC, it's averaged 19% in the month of August. So we sent this chart, excuse me, I think I've got it backwards. Let me go one chart. I apologize. So this is the chart that we sent to members on the 20th of July. PAYC was down 53%, testing triple support, and then we were going into that seasonal strong, month. And so I want to just share, and I apologize again for that, what things are looking like today. We said above 320 would be really great for this stock. And so right now we're trading almost at 400. It's up $80. Its average gain in August was 20%. It's almost already there halfway through the month. So in wrapping up, just wanted to share that the great tools within StockCharts here, that you can just use these extremes to find your shopping list. And this is where opportunities, come from, is using these tools that they have to find out where the next big opportunity might come from. So I thank you for your time today. If you are interested in our services, you can get a sizable discount by going to kimblechartingsolutions.com/StockCharts. Thank you very much.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.